The market is up 85 points higher on the Nifty, and that's why perhaps everything boils down to risk reward. Yesterday's close was a good time to take longs and not shorts. 282 points higher on the Sensex, 225 points higher on the Bank Nifty. Across the board, buying 3:1 is what you have on advanced decline right now. A lot of stocks surging. Indiabulls Housing is up 3.5%. In fact, talking about NBFCs, that's our next management, Equitas. Let's get the management. P. N. Vasudevan, the MD and CEO of Equitas Small Finance Bank, is with us now. Mr. Vasudevan, good morning. Thanks a lot for joining us. Is it safe to say that the worst of the liquidity issue for the financial sector is now out of the way?
Good morning. The liquidity issue, if you look at it for the banks, the current situation is that the deposit, the fight for deposit is still very high amongst the banks. And if you see the last 2 quarters, 3 quarters, the advances have grown by around nearly 13-14%. And deposit has grown by only around between 7 to 8%, and the latest figure is 9%. So there's clearly a gap between the deposit growth and the advance growth for the banking sector as a whole. And if you look at the latest CD ratio of the banking sector, it is nearly 135 or 138%. So that shows that banks are really dipping into the excess SLR probably and funding the asset growth, and which is happening for about 2-3 quarters now. But on the ground level, if you see, all the banks have raised their deposit rate sometime in the month of November, and no one has really reduced the rate of late. In spite of RBI having reduced the repo rate recently, banks have not really taken the cue and the risk of reducing the deposit rate, because there is this feeling that a deposit is a little bit hard to come by, and it is better to get the deposit focus right now for the banks rather than kind of reducing the focus on deposit, because banks are running a little short on the CD ratio.
Yes, actually.
So I would say that maybe the next 2 quarters or so we...
No, please go ahead. Sorry.
Yeah, so our feeling is that for the next 2 quarters or so, probably the banks will still want to be quite significantly focused on deposit mobilization, because I think the advances growth has come back to the system over the last 2-3 quarters. I think the focus has to be more probably on mobilizing deposit enough to fund your advances and your SLR CRR.
Got that.
So
got that, Mr. Vasudevan.
On deposit.
Yeah, I got that. So now, can you tell us, give us an idea as to how much costlier will funds become for you? Because all of you are going to compete for depositors' funds. And can you pass that entire thing on? Or will you have to take a little bit of a hit on your margins?
So the smaller banks like us, we normally do keep our deposit rate nearly about 1% or slightly more than 1% higher than the larger banks, because the depositor has to have some kind of a motivation to put the money on a smaller bank rather than putting it on a larger bank. So we do keep our own. If the other banks are offering around 7.5% or so for a 2-year deposit, we are offering between 8.5 to 8.75. So that's been there, the trend all along. It's not a recent trend, but this 1% gap is more or less there from the beginning. And our ability to pass on this interest rate, significantly we do operate on the lending side in the informal economy, where the bank's supply of money from the banking sector has been very low. So the ability to pass on a 0.5% difference or a 1% difference has been there for historically. So we don't see that as a major issue. And on the interest rates, we will keep it a little higher than the bigger banks, because that differentiation we have to maintain to attract the deposits.
Okay. Mr. Vasudevan, good morning. The 2 pockets that saw a lot of pressure in the quarter gone by was commercial vehicle and housing finance. Are you seeing any incremental slowdown in those 2 pockets?
No, actually the commercial vehicles is doing well as a class of assets. And with the economic kind of growing again back to over 7%, the commercial vehicle traditionally, it has always had the typical cyclical thing, which is very much linked to the economy over the last 25-30 years, if you see. And right now, I think the commercial vehicle is beginning to come back and do good. And I know our own experience on commercial vehicle has been extremely good. Our NPS have held, it's been dropping a bit quarter on quarter over the last 3 quarters. And I think commercial vehicle is set to kind of, do good maybe for the next 2 to 4 quarters. As far as housing is concerned, the focus is, the issue is really the affordable housing, where we have seen affordable housing portfolios. The NPA has been moving up a little bit for most of the players. The mainstream housing, maybe it's better, but we are not in the mainstream housing. We are all in the affordable housing, and we have seen the NPS moving up, fairly consistently over the last maybe 2 years for most of the players. And there you do want to be careful. You don't really want to go and go very heavily on growth and kind of take a pause later. So you do want to be a little careful on the affordable housing. I don't think affordable housing today has really established itself as a very good asset class. I think it's still in the works.
Before that, you were telling us that, the NPA for the affordable housing segment has moved up quite a bit in the last 2 years, and the industry has to be cautious with respect to lending. Can you tell me what Equitas' own exposure is to the affordable housing segment, and have you scaled down your, growth targets or lending there?
Well, our affordable housing portfolio is approximately around 500 crores, and it's kind of built over the last maybe 2-3 years. So we have been going at it reasonably slowly. We haven't really rushed into it, and 500 crores is built over 2.5-3 years. So it's not a very strong growth that we have had in the past. And our experience of this 500 crore book is that our NPA is somewhere in the range of around 1.2%. which is not bad, but not very comfortable, but not very bad. But we still want to go it little safe and steady. So maybe another 1 year, 2 year, we will still be at this kind of growth levels. Maybe have a 5-6 years of experience in this product, because typically these are 10 to 15 year loan products. So you need to at least complete a 5 to 6 years tenure. Then only you get a good feel of how the portfolio performs. So we'll probably push the pedal maybe once we complete 5 to 6 years in this product.
All right, we'll leave it there. Thanks a lot for joining us. That's Equitas, the stock doing well today. In fact, the entire market is doing well. Slightly off the highest point of the day, but that would happen, right? The first sort of intraday dip is what you're seeing, but a lot of stocks doing well. The mid-cap index is up quite a bit. CG Power is up 5.5% now out of the F&O band, but the stock which is surging now is United Spirits, up about 4%, and of course it's been a good day for metals. One more stock which is showing clear signs of bottoming out up late is Ashok Leyland. And that's one more management that we'll talk to after the break. Gopal Mahadevan, Chief Financial Officer of Ashok Leyland, will be with us.